welcome to Coffee with Sound, Navigating Life and Retirement. Well, a lot has happened since we've talked last, and so we're going to discuss some of the strategies and the actions that we're taking and deploying based on what's happened over the last couple of weeks. So, Chris, let's jump right into it and get going.
Absolutely. And last week, Dave and Josh explained our dynamic fixed income and our economic growth sleeves. And in the last couple of weeks, you, or at least our clients, have seen us rebalance into those based on what we're seeing after the election and with the announcement from Pfizer that they had a 90% effective vaccine. So now this week, after what we've watched in the last week, what we believe we're seeing is a rotation from growth to value, you're going to see us rebalance the individual stock sleeves in your portfolio. So you're going to see a lot of trades. Don't be alarmed with this. This is normal. In a typical year, we do this in the 13th month. It would have been in the spring, would have been right at the very beginning of the coronavirus pandemic, and we didn't want to reconstitute the stock sleeves then. We've waited quite some time, watched the markets a bit, gotten some answers. And by and large, we're seeing a rotation from growth to value, Josh.
Yeah.
And that will be reflected in that stock sleeve. There's going to be a lot more value in that stock sleeve. But explain a minute, when you think of growth and value, what do you think of as a growth stock? What do you think of as a value stock?
All right, so in a simple form, in the simplest form, when we look at a growth stock, a growth company is focused on that growth. But what they're doing is they're taking those profits, they're taking the revenue, and what they're doing is they're pouring it back into the company to continue focus on more growth. So you're not going to see that dividend typically when it comes to a growth stock. But when you look at value comes in and you're going to see those time after time dividends, those companies that have been around a longer time. But what they're focused on is taking their profit and their revenue and returning them to shareholders. So you'll see that paid in dividends, and that's going to be their focus.
Yeah. And so that you kind of get the old line companies. We think of, on the value side, Chevron,
Right.
Caterpillar, you see Lowe's in there.
Yep.
And on the growth side, you see Facebook, Apple, Amazon, the big high-flying tech names are certainly growth companies. And over the last, what is it, Dave? I guess the last week or so, we've watched that rotation from growth to value.
Yeah.
Right.
So maybe explain for everybody out there how that rotation works and why it is rotating or what's going on with the rotation.
Okay.
From growth to value.
I think the simplest way to think about this rotation, and if you're watching the news, how would you know that it's rotating? In the last 6 months, you've seen the NASDAQ up a lot. And the NASDAQ is made up, it's very tech heavy, it's very growth heavy. That's always been its personality. And so in the last 6 months, you've really seen the NASDAQ outperform. And the Dow Jones kind of been sluggish. I mean, it's gone up, but it's been sluggish. It set new records, but once it got back to its previous record, it kind of hung out there for a while. And so in the last week, we started seeing that flip. We started seeing the Dow up, the NASDAQ down. And some of the extreme days, we saw even the futures market, you'd see the Dow up 5%, the NASDAQ negative 1%. That's a big difference for U.S. stocks for two major indexes to be that far apart.
We even saw some of that in September and October on and off with the NASDAQ.
Yeah, you've been seeing it, and we looked at some charts today where you could see it's been trying to do this for about 3 months. Which is typically kind of the early innings of a rotation.
Right.
So when we're looking for, you've said this before, that the trend is your friend. And the reason for this is that trends tend to keep trending, and that sounds very trite, but it's actually there's a lot of investment truth in that. And so when we see the early stages of a trend, what we believe to be a trend where money from investments are rotating from growth into value, we want to participate in that rotation early on, especially for our retirees. The value stocks that are high dividend, these tend to be good, solid, steady, core stocks for a retiree's portfolio because they're kicking off the dividend. But we're also rotating, as Dave explained last week, into high yield. And these have very much value stock-like tendencies as well, high yield bonds do. So we expect those to perform very well. I think in this trade, in this this rotation that we're stepping in at a good time, we'll be very pleased with the long-term outcome of it.
Yeah.
So there's a lot that we can unpack. We'd go to some kind of nerd space. We probably ought to stay out of that though, right?
Yeah.
I guess for the video.
For the video,
That's enough.
That's enough for the day. All right.
Yeah.
Well, that's good. Then wrap us up.
All right. Well, we appreciate y'all listening in today. If you have any questions, reach out to us, reach out to your advisor, email us, and please go ahead and subscribe if you haven't already. Like and follow us, and we'll see you next week.